in VC you have, and private equity, you have to win deals. It's not like public markets where anyone can go out and buy Apple stock. You got to win the deals. To win deals, you need some sort of brand, reputation, background. You need some sort of values that are going to click with entrepreneurs, where they're going to say, that's the investor that I want to work with. And none of those values, none of that brand, none of that stuff matters unless people know about it. Unless you are actively putting yourself out there in the world, showing people who you are, what you do. So that's why, for me, it was okay, let's do content, but I'm not going to do marketing per se. I'm going to write things that I hope people are interested in reading. And even if it's not about what we do directly, by doing that, it just kind of raises the brand awareness of the firm. The first interview that I did with you like 4 or 5 years ago is the first time I met you. And someone told me, Howard is not going to do any preparation for the interview. You're going to come on stage and he's going to say, so what's up? And then shrug his shoulders and we'll go from there. I mean, it's not a bad way to interview people.
Well, and I think Patrick does the same thing. And yeah. I love investing. That's why we're all here. You know, we could talk about everything that's wrong in the world, but that's all factored into the pricing of the U.S. stock market. You know, now there's a lot of good priced in, but I'm saying there's a lot priced in poorly. And this show is, you know, talking to my favorite people who happen to be friends. Some I've met like you and hang out with online. Some I actually haven't met, but like Ross Mason, I interviewed. I met him, but I mean, not friend. A few conversations and a few meetings, and then it's just you get to know them by doing these podcasts, and because of the online presence that we're all in, you know. So welcome, Morgan Housel. Give people a quick, because I haven't had you on. We've only done a few of these for investing for profit and choice. So give people a little background on the Morgan.
I'm a partner at the Collaborative Fund, which is a early stage VC company. I'm mostly what I do for my entire career is I'm a writer, a financial writer. I write about kind of investing history, behavioral finance, and I just wrote a book called The Psychology of Money. Howard told me to bring a copy, so here it is.
You only have one. My daughter and my wife. You know, it's a little bit tame for me. There's no nudies. There's no pictures. There's no charts.
There's a couple charts, but
there's no ladies.
Was it too slow for you? Is that what you're saying? But your daughter and your wife enjoyed it?
I haven't read a book. So you also, I credit you with making me feel good of my lack of reading. Because, you know, and we're going to talk about all reading and writing basically here, because reading and writing are the future. They always have been, but you could get away without reading or writing for about 50 years in this country, and look where we got. And now when reading and writing is at a premium and the creative culture is back bigger than ever, we've got a generation of 40 and 50-year-olds that I wouldn't hire. You know what I mean? They have no skills. They might have been able to travel and do the grunt sales work. And good luck. They can't command a room. They can't command a Zoom screen. They can't put together sentences that empower people. I mean, we've got like there's kind of like this, you know, you talk about Midtown Manhattan and you talk about how that's dead. Well, there's this whole mid part of the country that's like a dinosaur from COVID.
And I feel, I guess there's a couple of people like you and Barry who are older than me and Michael Batnick and Ben Carlson, but you guys were like the early front runners of the blog. But most of that older generation has just been completely left out of where the whole industry is going, which is communicating with your clients and prospective clients and everyone else online. There's a huge generational divide there. But you and Barry got it. Barry got it first. You were one of the early people.
Yeah, I used to read Barry without knowing who he was.
Right.
And it's just one of the greatest things that I ever did. I wasn't one of those students that loved to read or write. I was a teacher's pet all the way through. You know, I went to a Jewish day school. You know, in Toronto, it's Yiddish, French, Hebrew, English, 4 languages. I'm like 8 years old. And so you were a rebel. Like, you know, you got along because everybody, you know, you were scared of, like, I was scared of my principal, Mr. Nussbaum. And if you went to Mr. Nussbaum's office, it was 50-50 you came out without road rash. Mr. Nussbaum, I'm throwing you under the bus, but I have a feeling he might be dead. And so you did what you could. Like, I read and wrote because, you know, that's what you were like. That was the bare minimum. Like, if you're a good student, you learn 4 languages. And I used to rebel. I'm like, when am I going to use Hebrew and French? because back then it was Trudeau and you had to learn English. And today, the only language I wish I had really focused was the one where we were so abusive to the teacher. Because by the time you were at Yiddish hour, you were ready to torture this old booby. And if there was one language that I wish I still spoke, it's Yiddish, because it's the greatest expressive dying language. And my mom spoke it and my grandmother spoke it. And I would listen to these conversations. I think it's where I got my humor from.
Is it
one
hard
word
to learn?
could mean 100 things.
Spanish is hard, Chinese, or Spanish is easy.
You make up a word and it means something in Yiddish.
This episode is presented by Masterworks. My wife Ellen and I are longtime contemporary art fans, having collected contemporary art for 20 years now. So I was thrilled to have Scott Lynn, the founder of Masterworks, on the podcast to explain the fascinating art world and how exactly this industry operates. The art market allows us to think about diversification and fractional ownership in such a unique way. This is an amazing industry that remains uncorrelated to other investing classes. Every investor will enjoy listening to this episode, I promise. Head over to howardlindzon.com/masterworks to give it a listen. The link is also in the description of the video.
That's easy.
Yeah, and I do that generally half the time on my blog. When someone says that's a spelling error, I say, no, it's Yiddish.
Yiddish.
So you're a collaborative fund, which is a great firm. Now, you have a unique position within a fund because you're the first person, maybe Ben Evans at Andreessen. And did Collab Fund copy the Ben Evans model where they brought you in as like the voice of Collab Fund, trend writer, thinker? Or what do you think the inspiration was?
I think definitely Ben Evans did it before me, but the idea was, look, in VC and private equity, you have to win deals. It's not like public markets where anyone can go out and buy Apple stock. You got to win the deals. To win deals, you need some sort of brand, reputation, background. You need some sort of values that are going to click with entrepreneurs, where they're going to say, that's the investor that I want to work with. And none of those values, none of that brand, none of that stuff matters unless people know about it. Unless you are actively putting yourself out there in the world, showing people who you are, what you do. But then the difficulty is no one wants to read a marketing piece. So there are a lot of people who understand, yeah, we're gonna do content to build our brand. But the content that they put out there is just flagrantly marketing. It's here's why we're great, here's what we've done, here's why you should invest with us. No one wants to read that. Nobody except your mom and your LPs want to read that.
Yep.
So that's why for me it was okay, let's do content, but I'm not gonna do marketing per se. I'm gonna write things that I hope people are interested in reading, that they will like to enjoy, that they will like to read, that they'll share with other people. And even if it's not about what we do directly, by doing that, it just kind of raises the brand awareness of the firm. And you're going to draw way more attention, more eyeballs, more people coming back if it's stuff that people genuinely want to read, that's interesting to them. So that's what I do. I just write about kind of investing history, investing psychology, and that's it. So that's what I've done for my whole career.
And you got your start. What was your big break for people out there who know you? But everybody knows the story, but my audience may not. What was the big break, do you think?
Well, I started as a full-time writer for the Motley when I was a junior in college. So I started out early and I had no writing experience whatsoever. So the first 5 years or more were really rough. I had no idea what I was doing. I was just kind of hacking it along, learning by getting thrown in the deep end. So that was tough. 2013, I think, was the first time that I feel like people outside of the Motley Fool started reading it. And it was 100% because of Josh Brown. He was the first person that started pointing to something I wrote on Twitter. And then it just kind of caught on from there. So I'll always hold Josh near and dear because he was the first person that took a risk.
But maybe I'm not popular. I would have to think it was me or Phil. You really think it was Josh?
No, it was 100% Josh. There's no way it was you. I didn't meet you until like 2016. That's true.
Yeah, I didn't want to meet. I didn't think you were popular enough to help my... I think that's what Barstool Dave does to me. He checks he goes, if you can't help him, he's not helping you.
He's not talking to you.
Yeah.
So I try to keep that in mind too, of like how ridiculously how you can change someone else's career by just giving them a public compliment. So there's other people you've seen that happen to in recent years. Nick Majuli is probably the most recent example of someone who 2 years ago, no one had heard of him. He was a complete, as far as writing wise, total nobody. But he wrote good stuff. His blog was really good. And people like Josh and Barry and other people, you probably started pointing to him, and now he's just like straight to the top.
Yeah,
so you can do a
I'm
lot
very careful now
raise the profile of people.
I'm very careful now not helping anybody because I think I've done my part. I only want to be helped. That's my new social philosophy. Help me.
If you've earned that in life, that's okay. Yeah.
So I got that early. Like I just believed because I got a break.
Who was your Josh Brown?
My Josh Brown was myself. So obviously I had
So
mentors.
bullshit.
No, I'm saying like I had mentors. My Josh Brown was my own curiosity, meaning I was inspired by, if you'd let me finish and stop hogging the airtime here, I'd finish the story. I mean, people warned me that you would talk the whole time. So my Josh Brown is the web, Google. Like I searched a term sheet, it's an old story, and I got Fred Wilson's blog and Brad Feld's blog, and I was this goofball, unhappy hedge fund guy. So, the fact that they were giving away this information for free on a blog, I didn't know what a blog was. I knew thestreet.com but everybody wrote for thestreet.com. I didn't know what blogs were, right? I knew Jim Cramer blog, but on thestreet.com, right? I knew
what year is this?
Paul Kodrowski, 98, 97, whenever it became popular. And I was like, wow, this is unbelievable. Because I didn't have a big enough fund to pay for Bloomberg or Journal. I didn't like any of that stuff. So Street.com was like my Bloomberg. Yeah. And you got Paul Kodrowski. He had all these great tech writers, and then Kodrowski, Ritholtz, Todd Harrison. And so I just became an addict to writing, not about the market so much, just about this social thing like, all right, if smart people are reading this and doing this, I don't care. I don't have to be, as long as I'm not the last guy in, which kind of made me a trend follower. So my big break came from Fred Wilson, right? I just sent him a cold email about Wall Strip, and he knew enough about me by keeping my blog, by starting my own blog. He knew enough about me, right? So it's like my big break was like just discovering that guys wrote. Yeah, I should just start a Google Blogger, which I wish I still had a Blogger blog. I know some people.
Let me ask you this. Do you think there are really good writers out there who just haven't had their lucky break? Or do you think the cream rises to the top?
It's iceberg. 99.9% of the great writers haven't been discovered yet because I didn't take writing seriously. And for people to just reach out to me with my 3-paragraph daily, including you, that say, this is the way, I'm meant to write in 3 paragraphs, disjointed sentences, but people get it enough. They don't want to read these long pieces. Right. So it was inspired by like Chris Dixon, Fred Wilson, Brad Feld, all these great PCs that stopped writing actually because it's work. And some people just don't want to write. I just happen to love writing and I happen to love reading, just not books. So for me, when I read that you say, if a book doesn't hit me, put it fucking down, like you and Naval maybe, like just put the thing down. You don't owe it to anybody to finish a book. It doesn't make you less of a person. I think that's what the anxiety from like collecting magazines and books, I think that's where the internet really helped me. And I have to solve the tabs issue because I have 700 tabs open, which is kind of like how magazines and books used to pile up. And you can give me a tip here on how to do that. I know you have some tips. Those are my number one ask is going to be next but the fact that I have all these books and I know these people are great writers, but man, if they just did a tweet storm, it'd be so much easier for me. And if they just wrote a few blog posts, it'd be so much easier for me because the intensity of sitting down to a book, not that I'm important or my time is more valuable than others, but like, I don't know. So
it all comes down, it's just the incentives of it. You can't make any money from a tweet storm or a blog post. You can sell a book though. And that's what, the huge majority of books that I start, I don't finish because they don't need to be finished. You read a couple chapters, you get the point and you're done. Because that post should have been a blog. It could have even been a tweet. But I understand you can't make any money doing that. So I think once you just understand what's going on, that you don't need to read to the end. It's not that you're missing anything. It's just that the economics of what that person was doing required them to stuff 250 pages of fluff and nonsense into their one big idea. I think that's true most of the time. So I don't even look down upon writers who do it. I get how the game is played and why it's done.
Yeah, and I look at I'm an art collector, but not a great one. I'm too cheap to spend like 50,000 on something. So I hunt in the 1,000 to 5,000 range for art that resonates with me. Like I just can't.
What did that one behind you cost?
So this was my first. I was in college, and you imagine I have no money. Now in college, when I was in college back in the 1930s, you go to college and they give you 700 credit cards before you even, today kids don't, it's all debit, which is, but back then I had a Best Buy card, I had an Amex, I had a fucking Capital One card, I had Frank's Garage Spa card. I had so many cards. So, when I was in college and I'd be traveling with friends, I would just collect art because I would just stop and go, how much is that? And if someone said like the right price, this was $800, worked early, very famous artist now, 30 years later, whatever. But if you look at the pop culture of what he created, think about what the cell phone today, and this is where you ask about writers, how many writers have been discovered. Think about, look at that car. He had his mobile phone, a fax machine. Like you think of it, that was the broker. Like that art spoke to me 30 years ago. That was
the 2 phones up to the years.
2 phones, but look at his car. He's got food. He's got a cop chasing him. And the real first one, the first one I bought was the top one. There's a because it just spoke to me as a broker at the time.
Cool. Is that a basketball net above these? What are we looking at?
It's like the Dave Leonard. No, it's a Restoration Hardware light. But the idea that all that is now squeezed into a cell phone and a keyboard.
Yeah.
And you got your Bloomberg on your phone. You've got your phone is your phone. You can order food, and you really can do all this hands free. And so, if you tell me all the writers out there that just haven't taken advantage of all that chaos squeezed into one thing in a keyboard, and eventually your AirPods or your headphones. So I'm super bullish on content and creator economy, and I feel like this old generation that makes fun of the millennials and the Gen Z don't realize how creative this young generation is. And you go from one true fan to Patreon to StockTwits to Discord to YouTube. And there's so many ways for the next Morgan Housels to get their 1,000 true fans, to pay them a subscription a month, and to live the life that they want to live. So I'm so as bad as things are for the 40 to 60-year-old, I feel like that once they get through COVID in the next year, like this next generation is going to be explosively creative. And the only thing I'm not sure of is travel. What's your thought on travel as it relates to that?
I can't wait to get back out. I traveled. I know you did too. I traveled a lot pre-COVID. And I needed a break. A break was good. I just don't know if I wanted a 1-year break, but I can't if you had talked to me in February, I'd say the definition of my nightmare is like going into a packed bar with a bunch of strangers, being shoulder to shoulder with a bunch of people and having to yell to have a conversation. That's my least. I absolutely hate that. And I feel like right now I would kill to have that experience of just like, I wanted to go hug a stranger right now. I'm so sick of being plugged inside. I love my family, but I want to see other people. So I can't. There's definitely going to here's the thing. I think 2021 might be a huge year for travel because of pent up demand. Mm-hmm. And then 2022 might be little because once the pent up demand is gone, you're still going to have a big group of people who say, look, a Zoom meeting works fine. We don't need business travel is going to be a fraction of what it was because people realize that in 2020, it actually worked okay. But 2021 is I think probably going to be one of the biggest years for travel that we've seen. And that's all countered by the fact that a lot of these airlines and hotels and restaurants won't make it, or they'll just have reduced their supply so much. Like United and American laying off tens of thousands of people. You can't just call those people back on a moment's notice. Those people are going to go do something else. So what if demand comes roaring back in early 2021, mid 2021, whatever, and those companies are completely flat footed? What happens then? It's very, the perfect example is what happened. Hold on one sec. No, the perfect example is what happened to home builders after 2006. Which is they laid off all of their carpenters and their brickworking guys, et cetera. And those guys went and did something else. They've found other jobs. And then when housing demand came back, the contractors couldn't go hire carpenters because they had all left. They went and did something else. Aren't pilots going to be the same thing?
Won't marketers and content creators, once they figure out to do a Shopify or these 10 Shopify competitors coming up, that do things for you. So exactly. So this creator economy is going to explode because you're not going to be able to get these people back to work at a company that needs, growth hacking and writing, right?
Yeah.
These people are all going to learn these trades and just use it themselves and go. So you're right. That's a really good point. There's going to be all kinds of stresses in the following year, 2022 to 2023, as Disney comes back online and realizes we're going to have to actually pay up to get
get people back.
To get people back to work.
They laid off like 28,000 people.
Yeah.
How many? Let's say by next spring we're all vaccinated. This is quote unquote over. Let's say that's the case. How many people are going to want to go to Disneyland?
A lot.
50 million. But they just laid off 30,000 employees. Like, can they deal? How do you deal with that mismatch? It's going to be nuts. And that's why I think like the pressures for legitimate inflation in some sectors at least, maybe not on average, but in some sectors are probably the greatest in the coming year or two than they've been since the early 1980s. Because of that, because you're going to have pent up demand with a broken industry.
Yeah, which is the Achilles heel of everybody's argument. Rates negative. Totally get it, printing money. And just when you think that the government will not, it's going to be this unintended consequence will be rising inflation, especially pockets of it in different industries. And that's the shock, I think, that the page 10 shock that no one's talking about, because they shouldn't. It's still early, and there's no guarantee that America gets their shit together enough to get out of COVID in a normal amount of time at this point. But the pent up inflation in certain things will be crazy. And that's a big problem that the market is not pricing in, which is a multiple problem. It's not the end of the world problem, because there's still not a great amount of supply for all the money that's out there. But from a macro standpoint, I think inflation's the hidden beast. And, it wouldn't take much for people to freak out about inflation.
No, because everyone, like, not only is the narrative that it's gone, it's buried, but virtually no one has experienced it in their life either. Like, how many people were working adults in 1984? Like, what percentage of current workers were working adults in 1984? It's fairly small.
Zero. Yeah.
So like the muscle memory, the scar tissue of that, I think if my generation were to experience 4 or 5% inflation, I think we would panic. We would freak out. We wouldn't know what to do with it because it's so foreign to us.
Yeah, it's so foreign. We're so used to deflation, not inflation, whether it's getting an Uber. The only inflation they have is, do I want to go to the store, which is cheap, versus having Lyft or Uber bring it to me, which is expensive. And so they're used to certain inflation.
Like, forget hyperinflation, forget the tinfoil hats. But if you had 5% inflation, that would be enough to get people to panic.
And so when did you know you liked the idea of writing about investing? When did it click?
Well, I would split those up into two. I've known I was very interested in investing since I was a teenager. I didn't know anything about it, but it was always fascinating to me. Writing was different. Like, I started the Motley Fool, I had no writing background. It was not part of my career plans in the slightest. I just stumbled into it on accident. When they offered me a job, my mom desperately tried to talk me out of doing it because she was like, you can't write. You've never written anything. What are you doing here? Mm-hmm. So I had no experience with that. And true enough, like, the first couple of years, like I said, were brutal. I had no idea what I was doing. So it was probably after I had done it for like 5 years, I started really enjoying the writing part of it. I always enjoyed the investing part of it, but the writing was work. And now I think I like writing more than investing. And if I had to think about my career, I think I'm a better writer than I am a finance person, if I just would like to tilt it that way. But early in my career, it was the other way around. So now I like writing more. And that's why, like, in recent years, a lot of the stuff that I write sometimes has nothing to do with investing, just because I like the writing part of it. So, and writing to me has always just been like, it's a good way to clarify your thinking. It's a good way to just like take a bunch of scattered ideas that are floating around in your brain and force to categorize them, organize them on paper in a way that if you didn't do it, if you didn't force it on paper, they would still just be floating around incoherently in your head. So that's why I like the writing process. It's not just communication. It's like a way to think.
So as a writer, and I don't have enough editing power to like do this on the fly, but as a writer, what are the tools? Because you don't know when the thing's going to hit you. So I'm a fake writer in the sense I have a blog. So I'd love to be able to write all day and wake up the next day knowing my post is written. So I've created these self-imposed rules where no matter what,
and you write every day, right?
Right. So at 6 a.m. the post goes. There may be nothing in it, but like I don't even know how to turn it off. So at 6 a.m. if I wake up at 5:50, I got 6 minutes to write a blog post. And time changes and everything, and I'd love to write my stuff a day early or 2 days early, but I don't have the discipline. So how do you
I'm curious about this. Do you go to bed the night before knowing what you're going to write, or you wake up at 5 a.m. and you think of it?
Yeah, I think of it, or I wake up at 4 and early and a couple of thoughts come into my head. I feel like writing when you have no thoughts in your head better. But I sure wish sometimes that I could just sleep until like 5:36 and know I don't have a deadline to meet. But listen, I do it as a hobby. I attribute all my success in the last 10 years, and I think it'll leverage into the next 30 years from writing. So there's no way I would ever stop. Because first of all, it's a muscle. Second of all, it brings me joy and it brings other people joy. And then thirdly, it's my business, right? I don't get paid for writing. But my LP, it's you don't know what's going to work for that LP that's a serious LP. That the returns are the returns. You send your deck, you have your numbers, they speak for themselves, right? It's like your grades. Like they can only, they work. But in the end, investors they relate to the person and to the way they think, because you're going to be wrong all the time. So like, how do you think what was he thinking in March 2009? Well, let's go to the playbook. And in March 2009, I was buying.
It's like your personal diary that's out there for everyone.
And I like to tell kids when they start, it's like, even if it's for nobody and you want to be in the investment business, like I get kids all the time, I want to work for Robinhood, I want to work for Robinhood. And I'm like, well, good luck. You're not an engineer. And therefore, your only skill that you could bring to them is a diary of like, do you know how to invest, or can you write, or can you work on their media side, right? Because if you're not an engineer or designer, it's an app, right? They don't, and you don't want to work in customer service. You better be able to be a creative thinker, because you're going to have to learn on the fly. So
I think this is David Perel's whole shtick, so to speak. But I think 10 good blog posts will probably get you so much further in your career, particularly when you're young, than any resume would do.
Yeah.
Because it's like all resumes are canned. Everyone says the same thing. They're in the same format. But a blog post is really putting yourself out there and showing people how you think. A resume doesn't show how you think. A blog post really goes to like, how do you think about problems? How do you solve problems in a way that, I think it's hugely important for virtually anyone in any field. And it's not that difficult. It's not that hard.
And so when Collab came to you, was it like instant? Because that's not a normal thing for it to have like they were thinking brand, and Collab does a great job around brand, but what was it, like an instant, you guys hit it off instantly, or did you kind of work into the role, or how did it work?
Craig Shapiro, who started Collaborative, reached out to me in, 2014, 2015, something like that. And we just became friends. It wasn't like the first time we met, it was, hey, come join. It was just great to know you. We had lunch a bunch of times. And it wasn't until I known him for like a year that he said, hey, why don't you join Collaborative Fund? It was hard for me because I was really happy at the Motley Fool. Totally comfortable. It's a great place to work. Still is a great place to work. Great company that I have a lot of respect for. So it was really difficult for me to leave that, especially because we had just bought a house right next to Motley Fool's headquarters. We had like a 3-month-old son at the time. Like it was a tough thing to do, but looking back, it's been great. I think what I love, there's pros and cons to working at big and small companies. To me, a pro of a small company is that you have so much more independence versus if you are a writer at the Wall Street Journal or Bloomberg or New York Times or something like that, you're working with a team of editors and helpers and fact checkers and more editors and headline writers, et cetera, which has a lot of benefits and pros. But to me as a writer, how do you know if you're at the Wall Street Journal, an article you write does really well, how do you know that was you versus something else that the editor put in that people like? Like, how do you, can you take a full credit for what you did? Versus for me, everything I write, it's 100% me. I'm the writer, the editor, the publisher. So if an article does well, I get to take full credit for that. And if it does poorly, I have to take full responsibility for that. I like that it's just like really clear feedback. If it did well, that's me. If it does poorly, that's me. You can't blame anyone else but myself, which is really critical for learning how to become a better writer, that you get a ton of feedback and you can take that feedback personally and seriously.
And so how do you, as a company that works on returns, which is Collab Fund, so how do you mix with the team? How does it work as someone who doesn't write checks at the firm? It's
been zero issue. I mean, we're all friends. We all work together. I'm on every deal call, still part of the team. It's just I play a slightly different role. But it's been. I think at some firms it would be an issue. At some firms, if there was some sort of tension about what do you bring to the table, so to speak, it might be in it. But it's honest. I'm not just saying this because it's the right thing to say. Publicly, has been no issue whatsoever.
And what part of investing do you like to do? So for yourself, I know you're not a stock guy. You're a markets person, and a long-term follower. So you're like me in the sense that like I preach one thing, but I love doing another thing, right? Like
what's your preach for?
Preach is basically QQQ. You can just dollar cost average into that. I'm not even so much a stock market person. I think too many young people think they can get rich. I think they should be investing in themselves. The first thing is invest in yourself. If that's not school, fine. Develop a superpower.
What do you think about Robinhood this year, where I know you have some background?
Yeah.
What's going on there?
Well, I mean, what's going on is you give people, it's like what's going on in the bullet industry. You give people a gun and they're going to want bullets. So, you hand people a weapon or a tool. I consider Robinhood a beautiful tool, right? That came along at the right time, at the right place. And like any tool, like a hammer, like a gun. Well, gun's not maybe a tool, but like a hammer. It's been used for good and bad, mostly good. So I think as I had been preaching for 10, 15 years, the markets are a language. Like if I had learned instead of Yiddish, French, Hebrew, English, there's math and reading. And then if they threw in the language of how markets work and how people behaviorally, how prices, and, how people behave around prices, we'd have a lot, it's like the Dutch, we'd have a lot smarter. It's like Soho. We'd have a lot more vibrant world if everybody understood how money moved and how prices affect mood, and we don't teach it. And so the fact that Robinhood gave people this tool to learn how they feel when they lose $1 or make $1 or lose 10,000 or we've seen it, like it's tragic. Some people will commit suicide, right?
This is what I mean. This is the hardest
hello,
thing for me.
like what were we thinking? But this has been going, what didn't happen in the Schwab era and the E-Trade era when they were like glorifying trading from a yacht. So of course, like I have mixed feelings. Like Robinhood, it was going to happen. Bad things were going to happen. But at the same time, they never glorified it. Maybe they glorify it.
But they've gamified it. That they've like explicitly done.
But it was gamified by E-Trade and Schwab. Remember in 2001, there was hundreds of acquisitions, whether it was CyberTrade or all these tools that made your screen. I mean, that might not have been video game. It was very much desktop video game, like blinking screens and like the action. Robinhood just squeezed it into a screen, which is just a different form of the same game. Because it is a game. The market is a game. The winners of the game aggregate the most money, and the true winners of the game do it with the least amount of work, which is why the game is such an interesting game. He who can collect the most amount of money using the least amount of like transactions and work, that's the ultimate winner of the game. So the faster we teach people that the game exists and that it's dangerous and you can play the game for profits and it works in your favor over time as an American, I'm all for it. Like I'm super bullish on Robinhood. We have sold some along the way, but it's just typical of this era where it's like a winner take all, and in no other industry. This goes to their valuation this year, 11 billion. And I'm an investor in eToro, which has a much lower valuation at the same probably size business. And they're in 140 countries because America is still the Super Bowl of markets, and America is still the Super Bowl of just the economy. That you have to be in America to win the game. Tencent and Alibaba obviously have a rigged system. They're great companies, but they've been protected. So what's happened here is there is no lift to their Uber. So in every other industry, whether it's food delivery or drones or robots, there's 20 companies. Every single VC went robo, chasing Vanguard and Fidelity model of assets under management. And sure enough, and because passive investing is a tidal wave, right? And sure enough, out of nowhere in 2014 comes Robinhood. They were a pivot themselves, and there is no competitor yet. And I don't think, I look at some of the people.
There's a million competitors. It's different brand, different appeal, but they've done the fact that trading costs $0 is the best indication that it's the most competitive industry you can imagine.
Yes, but they built they built the structure of a business that is built for that model, whereas all their competitors are only reactive.
Chase them.
Yeah, well, and they can only be reactive because if you're a head of product at E-Trade, you had to say this isn't going to work, because otherwise you're out of a job. Or if you're head of marketing and have 100 and you're in the advertising department of E-Trade, you're saying they can't get customers without advertising because you were protecting your own job. And so Robinhood had all that arbitrage and such a big head start, and there was no lift to their Uber. So yes, there's tons of competition, but there's no lift to their Uber. What's exciting is what's going to happen in other countries, because Robinhood can't move fast enough to other countries. And so there's going to be 1,000 Robinhood. Now on your side, what are you seeing? What kind of stuff excites you on the private side? The themes, what are the themes? Because this is about you. What are the themes that get collaborative fund and you interested?
Well, since I'm not active on the investing side, even though I'm at Collaborative Fund, like it's a tough question for me to answer. But I'm most interested in what the lasting impacts of COVID will be. And there's a couple of ways to look at it. One is, I think, if you think about the 1918 flu pandemic as the closest analog to what we're going through, and it was worse then than what we've been through now. But I haven't seen any evidence that there was a lasting social impact on how people's willingness to get out in society. And if you go back to the early 1920s, that was the era of like the jazz bar and the speakeasy and the dance club. Like I didn't see any, like going through something that bad. Did it impact people's behavior in the early 2020s? I haven't seen it. So that makes me think that whenever this is quote unquote over, we're just going to go straight back to what we're doing. But you could also make the argument that because so many small businesses are not going to make it through this, the ability to rehire people when this is over is going to be minimized. And this is going to be an economic thing that takes years to recover from, even a decade to recover from. And that because we have had things, most of us have had things relatively easy in life relative to what people dealt with in earlier generations, that this is so emotionally scarring to us, that this is going to leave a scar on us, versus if you were growing up in the early 20th century, a flu pandemic was something that you dealt with and moved on after all the other pandemics that you had been through throughout the rest of your life. So that to me is the most fascinating story right now. The biggest trend is like, how much is this going to stick? I don't think any of us, if you go back to March, would have said, you know, even if we're thinking about the stimulus and whatnot, that we would have held up as well as we have given the circumstances that we've faced. If you go back to March and it was 20% unemployment and everything was completely shut down, GDP falling 30, 40%, that you would look ahead and say, oh, by August, stocks are going to be at an all-time high because revenue and earnings are going to have held up so much better than anyone else thought. And by the way, because of all the stimulus, people's incomes are going to have surged to an all-time high. They're going to be paying down credit card debt, et cetera, et cetera.
Yeah, I didn't see
so
that.
Like if that hasn't made you humble about our ability to figure out what's going to happen next, I don't think anything will. But I think looking back at what's happened during other periods is instructive. Like I'm still of the belief that in 2021, it's not going to be getting back to normal. It's going to be pent up demand of people that are just going to go nuts. There's going to be so many people that go straight from Walgreens to get their COVID shot and go straight to the airport and head straight to Vegas. People cannot wait to get back out, go straight to the restaurant. Like you can make the case in that sense that 2021 could be like a huge economic bonanza just from the combination of pent up demand and stimulus hitting at the same time. That people, and maybe that's what the market is telling us. I don't want to be one of those people that's reading into it that much, but maybe that's what it's pricing in, the fact that we're going to have pent up demand plus stimulus. And that's why stocks are where they are.
Yeah, it's really one of the most fascinating years. Everybody taught here, any good trader that I like reading, and they don't have to actually trade, they just have to be a good thinker, is humbly amazed at what actually has transpired and stands out of the way. And you know, your opinions mean nothing. You know, the market is what decides things, especially for the small average investor. You can't get run over. You have to stay in the game. So who got you to write the book? Why after all this time? I mean, the book is kind of a stamp of approval on a life of writing and a future of writing. So why now? Well,
what we talked about earlier, you don't finish most books. You don't need to finish most books because most topics do not require 60,000 words of explanation. Mm-hmm. So I didn't want to write a book until I thought that I could write 250 pages that needed to be written. And it wasn't until I kind of came to this idea of the psychology of money to realize that there are so many different points to make. It wasn't just one point that needed 60,000 words, but I can make 20 separate points, each of which would be, 2,000 words or so, that was actually a book's worth of material. I wanted to so desperately avoid a book that should have been an article. And there's probably parts of the book that didn't need to be as long as they are. It's not perfect, but I wanted to avoid that. I wanted to wait until I found a topic that I was confident that I could put that much effort into. And it wasn't until I came up with all these disparate ideas that had a common denominator that I felt like I could go ahead and do it.
And what is the psychology of money in a nutshell?
I mean, it's the basic idea that as we think about money, we tend to think about it and we are taught about money like it's a math-based field, like it's physics, like it's just formulas and data. And that is a big part of what money is. It's a big part of what investing is. But to me, the psychology side is just more important because it can wipe out any of the analytical intelligence that you have. You could be the smartest genius in the world, the best analytical mind, even a great stock picker, a great business mind. But if you panic in March of 2020 or in 2008, none of it matters. None of that intelligence you have makes any difference whatsoever unless you keep your head on straight. So it's not that psychology is the only important part of investing. That's not it. It's just that it has the ability to supersede everything else that you know on top of it. And we tend to overlook it because since it's not analytical, it's just so easy to sweep under the rug or think this is just a mushy thing. This is not really a science. I'm not going to pay any attention to it. So it's the most important aspect of investing, and it's the single most overlooked aspect of investing, which I just think makes it really important.
Did the average person, should they do it themselves or hire an advisor, even if they're just starting out?
I have this thing where I think, I'm making these numbers up, but I think it's right. 10% of people don't need any help. 10% of people, even with no financial background, they get it, they understand it, they can do it their own, no problem. 10% of people cannot be helped. They're compulsive gamblers. Doesn't matter what you tell them, doesn't matter what information you put in, they're always screwed. They're always going to ruin their finances. 80% of people want and need good advice. And I think it's actually obvious which one of those three groups most people fall into. You can tell pretty quickly what group you fall into. And most people want and need good advice. So that's the target for financial advisors. I think most people, who know that they don't need advice. So of the 10% that don't need advice, there's probably 30% that think they're in that group. I think there are a lot of people who think they're in that group and they were wrong. But there's definitely a subset of people who don't need the help, and they should do it themselves because they can save so much on fees doing it that way. But it's a minority of people.
If you couldn't write and you have the network that you have today, what business would you start in the market? What is something that you think you could build a business in at scale? Is there something overlooked that just bothers you? You haven't been pitched the product yet, or something that if you had unlimited capital, you would just go attack?
I don't know what the solution is. So this is not like I want to start this business and I haven't. I just don't know how this business would work. But what is the betterment, the Wealthfront for financial advice? Not portfolio management, but how do you scale a financial plan? Because right now it doesn't really exist, or the things that are trying to do it, it's not a real financial plan.
I agree with you.
Because it's such a personal thing that you need to sit down and look at an expert who's going to get to know you and get to know your personality and your philosophies and your goals, et cetera. It's something that an algorithm so far has not done. And maybe the answer to this is you can't do it. So that's job security for a good financial advisor. I think medicine is the same. Like there are apps out there that people in medicine use. If you're a doctor, you use these apps. PubMed is one of them. There are a couple others that basically have every bit of medical knowledge in the Western world in them. And like everything that we know about medicine is in an app that a doctor can just scroll. Like you can digitize all the advice, but that doesn't mean that doctors are going to be pushed out of business, because what patients want, even if we're not talking about surgery or procedures, what patients want from a doctor is a person in a white coat to look them in the eye and say, you're going to be okay. That's what they want. And I think a financial advisor is really similar. Even if all the information, all the models, the portfolios, they're all free and online, you still want someone who can look at you in the eye and tell you you're all right. So maybe the reason that this is so difficult is just because you can't do it.
I feel like maybe I think about this every day, so it's cool that we're on the same. We'll talk about this another time, but that is the model. That I don't want to manage their money. I want to be their conciliary, right? Yeah. You got to figure out the right pricing model that allows you to scale good advice. But it's like a McDonald's of good. Like you can come in, see a menu, know it's trusted, but also get to talk to the guy behind the curtain, and just to know that like there's someone there. You know what I mean?
Yeah.
Because like when I started the podcast, it was like I'm just going to be that person. I could be wrong, but I'm at least going to tell people not to panic. Like on March 10th, like it's a little late. You had a couple months. You had Wuhan. You had the Chinese. You saw the airline numbers going down out of China. Like you had a lot of warning. So if you're going to sell in March, I thought that was a mistake. I wasn't saying buy hand over fist. I was like, stop panicking, right? And I would say the same thing here. It's probably a better time to panic a month before an undecided election that is threatening a fake election. Like how many warnings do people need to say, listen, maybe March was dumb, but maybe October is really dumb to be excited about prospects for 2022. You know what I mean? So I think somebody that can just give that advice in a wider range. So we should definitely think about something that. Are you happy with the book, how it came out?
I think when I write blogs, almost every blog post after I publish it, I'll go back and fix things, either because there are errors or because I'm like a week later, I think, I can write that paragraph a little bit better. Mm-hmm. The book, once you turn it in, that's done. And it was hard to turn it in. It was hard to just let go of it and say, this is the finished, but it was really difficult to do. So I actually, just like for most people, they don't want to listen to themselves speak because it's, they'll find all their flaws. I don't want to read the book. I don't want to look at it, because if I do, I'm going to read a paragraph and say, that was terrible. I should have gone and fixed it. So to prevent that, I'm not going to go back. And even sometimes doing a podcast, people will bring up parts in the book and I'll be like, oh yeah, I forgot that was in there. I haven't even looked at this thing in a year. So I think in general, I'm happy with it, but I know if I reread it, I would be unhappy with it.
And are you going to do another book in your life, you think, or this is it?
Yeah, no, yeah. My plan is to write a book every 2 or 3 years. That's the plan.
And if you were to, just quickly, in a daily setting, what are the tools that matter to you for organizing your thoughts? Because I know I forgot to ask you this.
It's Twitter and some books. And not much. And I wish I had a better answer for you. But
do you use Notion? Do you use a note taker? Do you use Google
nothing.
Docs?
And I don't know none of that. I mean, I use Google Docs for stuff. I have a Google Doc called Neat Stuff that whenever I come across like an interesting link, a paragraph, whatever it is, I dump it in there. But it's not organized at all. It's just a huge random dump of stuff. I don't think that's good. I'm not proud of that. I think I would probably be better at my job if I were more organized in that sense. But I don't use anything. What do you use?
Nothing, and it's driving me nuts. But maybe
we should
writers.
Fix this.
But there's so
I've tried a couple times. I've downloaded the note taking apps, and it's just too
Notion, Rome. Like David's all excited about Rome, and I'm like, I've never seen it used in the wild yet. So I've tried a lot of them, and after 5 minutes, it's like, no, this is. And what about Airtable or Excel or any of those? Still same thing.
I use Excel for stuff, but nothing is that nice. It's not much.
And is there anything that gets you excited is there anything that gets you excited in the investing world? Who do you like to read?
Who do I like to read? I mean, the people, like, it won't be surprising. Nick Majuli, Michael Batnick, Ben Carlson, Josh Brown, all the people that everyone else reads. Okay. I really enjoy reading as well. There's a guy named, let me pull up his name. They'll edit this out. I want to make sure I get his name right. Yeah. One sec. Okay, let's pull this up. Okay, 3, 2, 1. There's a website called blast.com, BLAS.com, that is like literally like hundreds of succinct book reviews. And they're so well done. There's so much information that you could get. He calls it the rabbit hole, like going into the rabbit hole. It's literally like a couple hundred books that he has a 1-page summary of the key takeaways and key quotes from the book. And I can get lost in that place for hours of just finding ideas because he's just summarized the key points from these great books. And it's so well done. So that is a resource that I think is not well known that I spend a lot of time in.
BLAS.com. See, that's good.
BLAS.com.
Okay, that was very helpful. And so I really appreciate your time. Obviously, we can do it again. Psychology of Money is the book. Collaborative Fund is the name of the fund that you work at. They focus on early stage tech, but they're doing rounds all over the place too, right?
Yep, that's right.
And then the Twitter handle is @Morgan Housel. And how do you like Seattle? Are you happy that you moved?
Yeah, I think Seattle's my favorite city. Seattle's, like, to me, the best mix of legitimate full-scale city with everything you want out of a city, but 10 minutes outside of it, you're in the woods and you can smell dirt and trees. There's no other city in America that I think has like the perfect, like, close combination of those two. Like, you live in LA, there's not a forest for 50 miles.
Yeah. And are you bullish on America? What you're excited about the future?
Yeah, but I think all of American history, and it'll be the future too, is a constant, never-ending chain of things going wrong. So you can be optimistic about the future and still know that it's going to be a disaster. Yeah. This year, next year, and the next year after. It's always a disaster, even if things get better over time.
All right, my man. Be well, and we'll talk to you soon.
It's been fun. Thanks, Howie.
See you, buddy.